In this lecture, we're going to be discussing reports on audited financial statements. The report of the audited financial statements is the final product that the auditor provides in the course of the audit. This represents the audit opinion that the auditor has based upon the completed field work, based upon our assessment of results of the audit, and what we're doing here is we are presenting in a very standard format the results of the audit. Now, the standard format is dependent upon whether we are using the PCAOB standards for a financial statement that's required to follow the guidelines of the Sarbanes-Oxley. Then we have the other types of financial statements where we're using the Audit Standards Board requirements, and these are non-Sarbanes-Oxley audits. The report of the financial statement audit has 8 specific elements, and what we see here is the actual audit report. This is the unqualified audit report coming from the PCAOB. A couple of things to focus on is you notice that the title is the report of the independent registered public accountant firm. It is addressed to the stockholders. There are 3 primary paragraphs and then an explanatory paragraph. The introductory paragraph identifies what statements we are looking at. These include the balance sheet, the income statement, the statement of retained earnings, as well as cash flow. The introductory paragraph identifies the fact that the management of the company is responsible for the financial statements, and our responsibility is to express an opinion. In the scope paragraph, we identify the standards that we use. In this case, we're using the standards of the Public Company Accounting Oversight Board. These standards require that we plan and perform the audit, and you notice the key words that we have identified before is to obtain reasonable assurance that the financial statements are free of material misstatements. The scope paragraph also identifies the fact that the financial statement audit is completed on a test basis. So we identify the fact that we are using sampling in the course of the audit. We are also expressing an opinion based upon our assessment of accounting principles and significant estimates made by management. In the opinion paragraph, the key point that this is an unqualified opinion is that we are expressing this opinion without qualification. So you notice the verbiage. In our opinion, the consolidated financial statements referred to above present fairly in all material respects the financial position of the company. Then it gives the dates. And the last couple of words in the sentence is in conformity with U.S. generally accepted accounting principles. So we are auditing based upon U.S. GAAP. Now you notice there's an explanatory paragraph. We will talk about this in a few minutes, but I also want to make the point that it's signed by a CPA, and then the date of the audit report that we talked about in our last session is the end of the field work, and it's not necessarily the date when we are actually issuing the financial statements. If we are auditing based upon the standards of the Audit Standard Board, where this is a non-Sarbanes-Oxley audit, the report is a little bit different. And also, instead of calling this an unqualified opinion, we use the term unmodified. So this is a report here, very similar, although the paragraphs are arranged a little bit differently. And then what you notice here in the opinion paragraph, slightly different in the sense that what we say is that in accordance with accounting principles generally accepted in the United States of America. But the context of what we're saying in this report, very similar to the Sarbanes-Oxley report, where we are following the standards of the PCAOB. What we need to understand is that besides the standard 3 paragraphs of the introductory paragraph, the scope, and the opinion paragraph, is that we may include additional paragraphs, additional information related to additional issues. In our first example, we had an explanatory paragraph that referred to the report on the audit of internal controls over financial reporting. We'll talk a few minutes about the explanatory paragraph for going concern. We may modify the wording if the opinion is based upon work of another auditor, if there is a lack of consistency, and an additional emphasis of a matter are things that we would include as part of the audit report. Here is an example of when we are referencing to other auditors. If other auditors are completing a substantial part of the audit, we are going to refer to this in the audit. So what we identify here in the auditor's responsibility is what the other auditor did in terms of dollar volume related to total assets and total revenue. And in our opinion paragraph, what we're stating, in our opinion, based upon our audit and the report of the other auditors, the consolidated financial statements referred to above present fairly, and then the language stays the same. But the key phrase here is based upon our audit and the report of other auditors. We talked in our last session related to going concern issues. Not only does the auditor have the responsibility to express an opinion of the financial statements, but the auditor also must consider whether or not this organization is going to continue as a going concern. If the auditor believes that the organization will not be able to continue as a going concern beyond the following period, then he or she is going to add a paragraph as an emphasis of a matter to identify the fact that there is a going concern issue. Here's an example of this, and what it's stating is that the financial statements have been prepared assuming the company will continue as a going concern. It then refers you to a note in the financial statements, and it refers to the fact that these notes have management's plans regarding these deficiencies, and then the final statement is that the financial statements do not include any adjustments that might result from the outcome of this uncertainty. In your intermediate accounting class, you talk about changes in accounting principles. Say you're going from LIFO to FIFO, or average cost to FIFO, or changes in reporting entities, or correction of a misstatement. These are going to be added as a emphasis of a matter in the audit report. We would not be making any comments in the audit report related to changes in accounting estimates, changes that have a material effect for future events, or changes in classification or reclassification. Additional emphasis is that what the auditor is saying is that under certain circumstances, the auditor wants to emphasize a specific matter regarding the financial statements. This is presented in our explanatory paragraph. Up to this point, we've talked about the financial statement audit from the perspective of issuing what we call an unqualified or an unmodified report. We, in fact, may need to depart from this if we have a scope limitation, if there is a departure in the financial statements related to compliance to GAAP, or if the auditor has a lack of independence. Departures from an unqualified or unmodified report, what we are saying is in a qualified statement, we are using the term except for. In a disclaimer of opinion, we are not expressing an opinion. And then in an adverse opinion, we are reporting an adverse opinion related to the financial statements. The extent of what we're doing depends upon the pervasiveness of the issues. So we are reporting an unqualified report when the misstatements are immaterial. If they are material or if they're pervasive depends upon how these misstatements affect either a certain component of the balance sheet or the income statement, or if they're so pervasive that they essentially affect everything within the financial statement. And we'll get some examples of this as we go along. But there's a very important table. This is in your books, and I strongly recommend that you understand the context of what's going on here. So you notice on the left side we have immaterial. Immaterial misstatements is we are issuing an unqualified or an unmodified report. If we have a material error, we're going to issue a qualified report. Again, qualified is except for, qualified for scope limitation, or qualified for GAAP departure. If it's pervasively material, we are either going to disclaim the financial statements or report an adverse opinion. If we're looking at this from the perspective of a scope limitation, this results from the inability to obtain sufficient appropriate evidence about a component of the financial statement. If we're looking at it from the perspective of non-GAAP compliance, this results when the financial statements are materially affected by a departure from GAAP. And then the auditor is independent, results when the auditor has some form of prohibited relationship with the entity. Here is an example of a scope limitation, and the scope limitation is pervasive. Therefore, we are disclaiming our opinion. Basically, what's taking place here in the basis for the disclaimer, we are unable to audit a substantial portion of the balance sheet because it's part of a joint venture and we don't have access to the information. Because that joint venture is so substantial as compared to the entire financial statements, it is considered pervasive. Therefore, we are disclaiming the opinion. In the disclaimer of the opinion, because of the significance of the matter described in the basis for the disclaimer of the opinion paragraph, we have not been able to obtain sufficient appropriate evidence to provide a basis for an audit opinion. Therefore, we do not express an audit opinion. If the limitation is material but not pervasive, we are going to issue what we call a qualified opinion. In this case, we're unable to audit a specific component of the financial statements. So in the qualified opinion, what we are saying, in our opinion, except for the effects of such adjustment, which has just been described, if any, as might have been determined to be necessary had we been able to examine the evidence regarding the foreign affiliate and its earnings, the financial statements referred to above present fairly in all material respects, and the verbiage continues as we've seen before. But again, the key word, and this is why it's qualified, is we are qualifying our fair presentation opinion with an except for. So that's why it's called a qualified opinion. In a non-GAAP qualified opinion, what we're saying here, explanatory paragraph defines what the issue is, and then in our qualified opinion, what we're stating is, in our opinion, except for the effects of not capitalizing certain lease obligations as discussed in the previous paragraph, the financial statements referred to above present fairly in all material respects, and then the verbiage continues on as we've seen before. Qualified opinion because it's material but not pervasive, and we express what is the except for component of the piece that we were unable to audit because it's a scope presentation, or in this case is because it was not presented fairly based upon generally accepted accounting principles. Here is an adverse opinion, and in this case we are reporting an adverse opinion of the financial statements. In our opinion, because the effects of the matters discussed in the previous paragraphs, the financial statements referred to above do not present fairly in conformity with accounting principles generally accepted in the United States. So the adverse opinion is that the financial statements do not present fairly. This is a GAAP departure, and it is pervasive. Therefore, we are expressing an adverse opinion of the financial statements. So in this brief discussion, we've identified the unqualified and unmodified opinion. We have identified when we would add an explanatory paragraph, and we've identified the departures from the unqualified opinion. The departures from the unqualified opinion are going to be scope limitation and are going to be GAAP limitations. If it's material, we are going to express a qualified opinion. The qualified opinion is going to be using the term except for. If it's pervasive, we are either going to disclaim the opinion or we are going to express an adverse opinion. So thank you very much, and everybody have a great evening.